Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 26th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We got some economic data basically out of Japan. Core CPI, Consumer Price Index, came in at 0.5%, expected to be 0.6%. And then basically moving over here to the United States, we've got a lot to go over. We've got our building permits came in higher than expected. Remember, building permits are a little bit funky. They're trying to be a forward-looking type of metric, but just because you pull permits doesn't mean you actually are going to build on those permits, okay? So I can pull a permit. It doesn't mean that I actually build. So it's forward expectations, but permits are all over the place, to be quite honest. Anyway, they did come in higher than expected at 1.33 million units expected, or permits expected to be 1.3 million permits. So slightly higher than expected there. Housing starts, that's the one we really look at, and that came in at 1.08 million units, expected to be 1.25 million units and 1.25 million units. And last month's number, it revised down a little bit as well. It originally came in at 1.25 million units and came in, they revised those down by 50,000 units lower. So even the headline number being bad, this makes it worse. It does stay above a million, so that's a good thing, right? We've got that going for us, but not looking too great on that front anyway. And then we have back here also in the United States, Powell speaking or testifying today and tomorrow. We had another Fed governor speaking yesterday, and then all kinds that over the weekend and on Friday. But again, we got Powell speaking today. Also, Richmond Fed Index came in higher than expected. We've been seeing a few of these Fed Index, the manufacturing index, come in a little bit lower than expected. If you remember the Philly Fed, I think was a really bad one. Just off the top of my head, I think that was bad. But this one came in a lot better than expected at 16, expected to be a 6. No revisions to last month's number, which was a negative, remember. But this is a nice win for this month's reading. And then consumer confidence coming in higher than expected at 131,000, 131, expected to be 128. 5, let's call it, and they revised last month's number up slightly from 120 to 121.7. We got trade balance and a couple other things coming out a little bit later, but I'm not too concerned about that. Let's move on to the overall markets. We've got crude oil right now trying to claw back a little bit after yesterday's sell-off. Again, I think that we're going to kind of continually grind down a little bit back to about 52.50 in the crude oil. I don't really see the demand happening right now. We'll have to wait. Wednesday tomorrow we get crude oil inventories. That's going to be a huge determining factor as to the directionality of crude oil going forward. I think we're going to see probably another build, and that should put downward pressure on on crude, but I don't know that it necessarily will. Gold really, toughing it out up into this 1,300 handle. I didn't really expect us to kind of linger up in this level, but price is starting to be accepted again up here. We could actually see the paradigm move higher here with the point of control moving from 1225, which is where I thought we were going to be spending the better part of the summer, up to this area where it's about $100 higher at 1325 or 1330, you could call it. So ready to accept price higher. That almost seems sure to be the case relatively shortly. If we spend more than a couple of days up here, I think that we're going to see that start to shift. Then we move on to the overall equities or let's talk about the bonds. Sorry. Bonds are moving higher again today, trying to get some momentum to the upside. But again, they're really kind of priced to perfection with the interest rates not moving anywhere. We've got the VIX trying to claw its way higher up into the 15s, up a little bit, up a quarter today, but we'd like to see some more volatility coming into these markets as far as I can tell, or as far as I'm concerned, I should say. But I don't know if we're going to necessarily see a big correction happen anytime in the near future. I think that we should see a bit of a correction starting to happen. It looks better in the Dow Jones, which doesn't have the overnight trading going on. You can see here, Dow Jones looks like a pretty toppy pattern right now. Today is pretty important because the broader markets on the equities, the bigger equity markets, have kind of created a toppy doji on most of the markets. Now, if we finish in the lower part of today's candle, and even maybe below yesterday's low as a settlement, that's going to indicate some bearishness coming forward for the next couple of days. If we finish near the highs of the day, it's going to set up for like a very much like a continuational pattern. So watch for what the market's doing late in the day, probably the last hour or two in the day, to really come up with our directional assumption going forward. Like I said, a move strength in the late part of the day is going to make it look like we are going to continue higher and maybe test some Fibonacci levels higher than us, test some resistance areas. But any settlement in the lower part or a settlement below yesterday's low is going to look like a bit of a topping pattern. So we got to wait to see what that all sets up. But this is what I'm talking about. Settlement near the lower end of the range is going to look very toppy. And we'll see with the equities, I think, at least as long as they haven't changed since I started vetting for this webinar, looks a little like a continuation pattern. But Dow Jones off by about 100 points right now. We look at the E-mini S&P, the NASDAQ. This is one of those charts that I was saying looks like a continuation pattern. Yesterday, if you just blocked this out, it would look very toppy. But with a move and a settlement near the highs of the day, you can see you got two counter-opposing dojis. That usually is a continuation pattern, especially when it's in the middle of a move, which is what we are. And then if we finish near the lows of the day, you can see that that's going to finish right on that 9-day moving average, which is getting ready to cross over the 200-day moving average, bullish short-term trend. But settlement near the lows, very bearish. Settlement up near the highs, it's going to look continuation to me. So we're going to have to kind of wait and see what happens. Let's look over at the E-mini S&Ps. Looks very similar. Just because it's a red or a green candle doesn't mean anything. It's really kind of where we closed towards the top of this range. If it were only having this range today is where I'm kind of talking about. If we stayed within this range and finished near the highs of today's current range or today's current lows, then that would look bearish towards the lows, bullish towards the highs. Okay, I think I beat that dead horse enough. Let's go over to the E-mini S&Ps on the breakdown of the daily chart. These are 30-minute candles. Each blue section is a day chart. You can see overnight inventory got very short. We talked about this yesterday. Overnight inventory got long. They never made any attempt to really flush those guys out. Today we got flushed to the downside right off the open. Have grinded our way back into today, but the whole range happening in the last hour or so, trying to determine whether the bulls are going to win or the bears. I think we need to wait to the end of the day to really kind of take a snapshot look at that to see how the chart or the technicals set up there. All right, trades I've done for earnings. Home Depot, I tweeted this out yesterday. I ended up deciding to do a strangle with the late day. There was a little bit of weakness going into that market, so I was selling puts, looking to sell puts for the upside. That kind of late day action you can see here heading into the late part of the day, close to the close. We just saw a lot of weakness throughout the day. So I decided to make it a strangle rather than just sell some puts. And obviously, I'm very happy about that today. So I went into the March that expire on Friday and sold the 180 puts along with the 200 calls in there. The market maker move was about $6 in here, so we were just shy of that. It was pretty close overnight to that market maker move, but I was able to get outside of that market maker move range. I think it was right around 190 when I put this 190, 191 when I put this trade in. So I was about $9 to the upside and a little bit better than $10 to the downside outside of that market maker move, like I talk about in the webinars when we're setting up the rules specific for that. I was able to do that 180, 200 strangle in there in the March for 87 cents, and I was able to buy it back for 40 cents this morning. Sorry, 49 cents this morning. I did have to chase that a little bit, probably a little bit better now after that market moved a little bit higher. But like I talk about, I like to cover these things in the first 15 minutes to a half an hour, which is what I did with Home Depot. And that's about it. The only other thing I'm really looking at, I'm struggling with, is this deer trade, especially off of the open this morning. This trade was looking really good. I was about a 25% increase in the premium I paid. So I paid about $5 and some odd cents. It was trading around $6. It was $6 and something. So that increase of 25% overnight is a very tough thing to hold on to. I'm looking for 50% of my max profit or 50% increase. I've gotten 25% overnight. I've beaten the probabilities at that point. I might very well end up covering this by the end of the day today. It's gotten a little worse since the morning. This morning, yeah, it's gotten about probably 40 cents worse since I really was considering covering that this morning. All right, so that's it for today. Check out Thursday's webinar. Is going to be a really good one. We're talking about high implied volatility strategies. It's great for premium selling. I'll show you how to set these strategies up according to my rules, not going out online and just saying, hey, yeah, you go out there and you buy an out of the money call and then you go out and sell a further out of the money call and there's your call spread. Well, they don't tell you strike location, environment, and what kind of premium collection, all of that stuff. Is what I talk about, specific rules you need to follow in order to implement any option strategy. Okay, so go check it out at protraderstrategies.com. If you can't take that, take it easy.